Hello everybody, Bill Bush here, and today inside the plan we're going to talk about risk versus reward. Now inside your company retirement plan you likely have several investment options to choose from. Every one of those investments has some degree of market risk associated with it. That is, the possibility that you might not get back the amount you originally invested due to declining prices in the market. That risk level also corresponds with the likelihood of a reward or potential for growth. Knowing the correlation between risk and reward can help you make decisions on what funds you should be investing in inside your plan. Let's look at it this way. Looking at the primary asset groups you find in a typical 401k plan, most of those being mutual funds, along the bottom of the screen we have risk, increasing from left to right. On the vertical axis, going from the bottom to the top, we have the increasing potential for reward or growth. Now coming in on the low end of the risk-reward ratio is cash or cash equivalents, like money market mutual funds. The risk of losing value is low, but the chance of potential growth is also very low, making it a very conservative asset class. Now next we have bonds and bond funds, a little more potential risk, but also more potential reward than cash. In general, stocks and stock mutual funds carry a higher level of risk and thus the potential for higher rewards, and there are four classes of stocks to consider. Large cap stock funds tend to be the most conservative. Large cap funds are made up of stocks of companies valued at higher than $10 billion. They carry more potential risk than bonds, but not as much as mid-cap stocks. Mid-caps are companies with values between $2 and $10 billion. And moving further along the scale of potential risk is small-cap stocks, who have the potential for higher rewards than mid-caps. And finally, on the end of the scale is international stocks, who have a higher risk-reward ratio, greater potential for growth, but higher risk of losing value. International stock funds are made up of companies located outside the United States. Now keep in mind, just because of where a fund is located on the risk-reward scale doesn't guarantee it of outperforming a fund in some other class. It's important that you know the risk associated with any investment you have inside your company retirement plan and make sure it fits within your goals or circumstances. Now keep in mind the risk you're willing to accept now may change as you get closer to retirement. And we'll talk about that another time inside the plan.